All right, everyone. Hey, it's John again I'm back with Damon Wright from Gordon Rees. We are continuing our ongoing conversations about the FTC issues, compliance and regulatory issues, cases, and things that are relevant to the industry. So, hey, Damon, good to see you again.
Good to see you, John.
So I guess the big things right now are, and I'm going to excuse everybody. You have to excuse me if I have to pull back from the mic and cough because I'm getting over a cold. But Damon, we have the Warrior Trading Case. There's been some news, and then there's also a proposed rule change that the FTC has made. So I guess you want to start with the Warrior Trading Case.
Yeah. So I just want to update everyone kind of on the most recent developments with the FTC's enforcement activity against financial publishers and others kind of in the ecosystem. I know we've talked before about back in December of 2020, the FTC announced Operation Income Illusion. Around that same time, they brought this case against Raging Bull. Prior to that, they had brought a case against Agora, against Online Trading Academy. And then last spring, about a year ago this time, they lost a major case before the US Supreme Court, the FTC did, and they came out of that case not humbled, but fired up, to be blunt. And they have been really aggressively going after financial publishers since then, and the focus is on earnings claims. And so that's the focus in this case that was filed last week against Warrior Trading. Now, the FTC's investigation against Warrior Trading, I believe, started sometime in summer of 2021. And so what was filed last week was the FTC's complaint, as well as a settlement with Warrior Trading. So it's a situation where they filed the complaint, but at the same time asked the court to basically bless this settlement with a permanent injunction entered by the court. And so that was filed in the federal court in Massachusetts on April 19. I want to go through the complaint and kind of what the factual issues were there and talk about kind of lessons learned from that. But the FTC sort of summarizes the case in the complaint. Warrior Trading provided strategies and courses for day trading. And so the FTC says,
real quick, Damon, before you get started, how much is the settlement? Because I think that's important for everyone to know too.
$3 million.
$3 million. So they basically, they're paying $3 million.
That's right. And we'll go through the order in a little more depth later. The FTC, they issued a couple of press releases about this case as well, and the FTC is pretty creative and colorful when they try to publicize these things. But I'm frustrated because I don't believe they're always educating as well as they could. It's more of a kind of a rah-rah, look at how good of a job we've done, but not really informing and educating as precisely as they could. But the FTC says that defendants convinced consumers to spend hundreds, sometimes thousands of dollars to purchase their day trading strategies and courses by promoting them as opportunities to profit substantially and consistently. The FTC says defendants deploy deceptive earnings claims throughout their sales process and claim that their programs are a, quote, quick and simple way to get your dream of day trading success going, end quote. Contrary to defendants' representations, the FTC says many consumers who buy into defendants' day trading strategies do not profit consistently. Instead, they are likely to lose thousands of dollars in day trading in addition to the hundreds they pay Warrior Trading. The focus, as it's been for quite some time now, from the FTC is on earnings claims. And those are claims where the defendant or a financial publisher is talking about past money made or past successful trade alerts or recommendations, as well as claims about the future, what people may be able to achieve or likely will achieve. Those are all considered to be earnings claims. But at times the FTC has also said, talking about how you're going to enjoy financial freedom or be able to go on that dream vacation all around the world or retire and do nothing but play golf. The FTC has construed those to be earnings claims. So let me share my screen if you could enable that, John.
Yeah, one sec here. All right, you should be able to
Okay, great.
share.
Okay. You see that?
Yeah.
Okay. All right, so this is the complaint. And hopefully this is legible. The
Yeah.
FTC, can you see it? Well, okay. So the FTC starts off its complaint by describing how day trading is very risky. And the SEC has warned people about the risks of day trading. And FINRA has warned people about the dangers of day trading. And FINRA regulations require that FINRA members include this kind of disclosure in their materials. And in the complaint, the FTC then describes the sales process and some of the claims that are made. One of the things that's frustrating about the FTC's complaint, and going back to what I said, not informing consumers as precisely as they could, is something like section or paragraph 32 here. The FTC says typical representations made in mortgage trading's advertising included the following. And then they've got several bullet points of different representations. It's not clear if the FTC is saying that each of these claims is deceptive, or if the FTC is saying this is a cross-section of the claims, an illustrative sample of the claims that were made.
Right.
And so reading these claims, some I think I would say are high risk, and some I would say are medium or low risk, or shouldn't be a risk at all. Learn how I made over $101,208.47 in verified profits, day trading part-time in under 45 days using 3 simple strategies that you can use immediately to increase profits and reduce losses now. If the person who wrote this, presumably a warrior trading representative, guru, or Ross, actually did this, it shouldn't be considered high risk, in my opinion, because it can be substantiated. And the second part is just saying, I'm going to teach you strategies that you can use. So I'm not clear, and it's not clear to the reader whether the FTC is saying this is high risk or just one of the claims.
Yeah, and is it specifically if that's verified, then that's verified, but is it then the line that you can use to increase profits and reduce losses? That's fundamentally the problem. Like, that lack of clarity it's
very nuanced, right? And
yeah.
If it said using 3 simple strategies that you can use to do the same thing yourself, that's high risk. But if it says you can use to, now obviously you can make changes to this, like strike the word immediately. And if it said that you can use to become a more informed trader, that would be less risky. But likewise here, learn to trade with certainty towards the financial freedom you've always wanted. That's very vague. They're not using numbers. It's a future earnings claim, perhaps, because they're talking about the future, but people should be able to say that they are good at what they do, and they think they're going to be able to help other people to become better.
Now, from a copy perspective, and let's ignore the most obvious fact here, that there is a wildly inappropriate use of capital letters at every word of the sentence. But is this so? Like on the second bullet here, you have learn to trade with certainty towards the financial freedom you've always wanted to. So, like, one, that's a weird statement to me, just because what's the certainty applied to? Like, am I certain that I'm learning to trade? Like, trade with certainty? Is the certainty applied towards the financial freedom? Like, is this like, this goes back to my conversation with Aaron DeHogue on kind of the sloppiness of copy that causes some of these problems. Is the issue, and it could be the whole thing's a problem, but from me looking at this as a layman, I'm like, that sentence, financial freedom is an issue, okay, but is it because I said that you're going to be able to trade with certainty towards financial freedom, as if I'm implying that it's certain?
Yeah,
I don't understand.
I agree. It's a confusing, vague claim. But what's also vague and confusing is that the FTC isn't even identifying which of these they're concerned about, or if it's all of them. So yeah, it'd be safer to say learn to trade towards the financial freedom you've always wanted, and take out the words with certainty. I think the focus on the words financial freedom, the FTC could perhaps say that's deceptive. I'm not sure a court would agree.
Right. But
of course, by the time you're in court, you've already spent a lot of money, and it's been a major distraction. We create profitable traders with a lifestyle of freedom and independence. You'll find friends, community, and proven education at Warrior Trading. This claim could be entirely fine if it could be substantiated. Now, if it can't be, yeah.
Go ahead. Well, that one seems to be like specific. So that's an interest. That one stuck out to me because it says we create profitable traders. Now that goes right to that issue of typicality, doesn't it? Because
yes,
they're saying that if you say that we create profitable traders and that's typical, but most of our traders lose money, even if it's their fault and not because they're following your thing, like,
right.
And that's where that line seems to be on that one.
I think you're right. I think that's exactly right. So if the playoffs are going on right now, the NBA playoffs, if Jason Tatum says he's going to score 15, 20 points next NBA game, that's not deceptive. He's done it. And he can say that. If I say that, it's deceptive.
Mm-hmm.
I don't have that kind of athletic ability, and I'm not playing in the NBA. So the same claim from two different people, from one person could be fine, and for the other person be deceptive because it doesn't have a reasonable basis, right?
Mm-hmm.
Right. Finding the needle in the haystack is easy once you have a system. The FTC does not like talking about things being easy.
Right. I mean, that seems like such a generic and non-threatening or non-issue as a statement by itself. Right?
It does. Yeah. Warrior Trading has helped thousands of new traders over the years, and experienced traders struggling with profitability by providing the education, tools, and community. Again, some of these claims could be totally fine if there was backup substantiation.
Mm-hmm.
Others, I think, are going to be high risk. For instance, this one: start trading over my shoulder, side by side with me, because I guarantee you that next week, the week after that, I'll be trading the 1 or 2 stocks each day that move up to 20 to 30%.
Yeah.
That's a problem because it can't be substantiated because you're talking about the future and you're using numbers and you don't have a crystal ball.
And there's this old copy trade. This is a trope that's been using the word guarantee to apply to the you state you're thinking that you're applying it to the guarantee that I offer on the product, but you're using it in the context of guaranteeing a result. And I think there's been like, again, sloppiness, false belief, like hope, like that for a long time that would be like, oh, well, I'm using it to guarantee the service, and so that's okay because I'm not actually, but that's kind of BS.
Right. I'm not guaranteeing the return. I'm making a guarantee about my belief. Yeah.
Right. Okay.
Yep.
So
real day trading results, see our student success stories, learn to day trade profitably. Again, it would have been nice if the FTC said the Warrior Trading made these kinds of claims, and then said among those claims, the FTC alleges that these particular claims were deceptive or and were not substantiated.
Right. And I guess because it's a settled case, they didn't necessarily have to go to that kind of precision.
That's right.
That's right. Right.
Nothing was litigated. Yeah, it was a settlement. So, I mean, what's frustrating now is in trying to educate copywriters or someone who reads this complaint quickly, they might think that they can never say, use the words needle in a haystack or use the words financial freedom. And it's just, people are trying to figure out where the line is. And I think this is making it a bit harder. Now, the FTC is now talking about sort of particular statements that were made on online ads and Facebook videos, and Ross Cameron making a video. And there are a lot of claims about how much money he made and his success And the FTC never says that that's false, that he didn't actually achieve those things. And I don't know Ross, and I haven't talked to Warrior Trading's lawyer. But I think the FTC would have included that allegation if they could have said it. So I presume that he's been a successful day trader. Now, let me go a little further here. Yeah, a couple of other things were there are claims about how you need to only spend an hour or two a day on trading to be consistently profitable. Yeah, the FTC doesn't like the representations that it's just easy. Anybody can do this, business in a box, that kind of thing.
It could be a really hard 1 or 2 hours. I mean, I don't.
Yeah, right.
I'm not like a day trader, so I have no idea.
Yeah.
But I'm like, I don't. You know, I've seen those kind of claims. The time, like that time claim thing, seems like, again, like, where's the line and how do you, you know, if my particular system only takes, like, I know guys who only trade like the opening range and like and it's like the first couple hours of the day max is all they really trade, and they have really good personal results, then it's technically, I mean, it seems like it would be true if you mastered that system.
Right.
It's literally only during a couple hours, but then I guess it's kind of this, it's almost like, I mean, my thought is it this whole like kind of tableau, like, you know, that whole impression thing that they have?
That net impression.
Net impression, that's
yeah. So it's not whether their claim is literally true, but it's what the net impression is to the ordinary consumer.
Right. Which is such a vague thing, though. It's hard to.
It is, and it's the FTC often sort of thinks they know what it is, but they're all human beings who are all affected by their own environment and the surroundings, you know, around them and the other people they talk to. There can be confirmation bias and echo chamber and all these kinds of things. In litigation, what you would have would be a consumer survey expert that would really be able to drill down, once you identify the demographic and you have a control, really drive down what is the net impression to the consumer, what is the takeaway, not just what the lawyer thinks it is or is arguing that it is. The FTC also attacks the disclaimers, and I'm not talking just about fine print bottom of the page disclaimers, but disclaimers that are effectively in the copy itself, in the same size font in the flow, like this. You know, I started with less than $1,000, turned it into $1 million in trading profits. Remember, my results are not typical. Day trading is very difficult. Here again, John's results are not typical, are not intended to be a representation, warranty, or guarantee that similar results will be obtained by you. Such claims routinely appear in the description area below the videos on Warrior Trading's YouTube channels. So it's a weird thing that the FTC is doing. They on the one hand say you can't make these claims because you need to let people know about the risk. But then when a business sort of says, here's the risk, and it's not typical, the FTC sometimes wants to say, okay, that's not sufficient. And now you've contradicted everything you've said about the benefits. And so you've basically admitted that the earlier statements were false.
Right.
Kind of damned if you do, damned if you don't. And it's, again, I wish there was more clarity from the FTC, and you can divine it. And I know what they're looking for, but they haven't explained things very well here. And that's not the purpose of a complaint, but
right.
I think it leads to confusion. So here they're talking about the sign-up page on the website. So not a promo or an email, but actually on the site. Strategy 1, how I drastically reduce risk and achieve a higher rate of winning probability on trades. 2, how I easily find the right stocks to trade without trade alerts every morning in 10 minutes or less. 3, how I build a trading strategy for any market that has the potential to produce big winners and small losers. Again, key thing here is substantiation. In the FTC, in the complaint, doesn't really say whether it views these as deceptive or is just giving the reader background. Now they just attack the disclaimer on the sign up page, saying that it's at the bottom of the page.
And I feel like that's the most frustrating thing, like you said about this one, as I read through it, is that I feel like I know less than I did before about what's okay. So it's like I don't feel like my understanding and knowledge of
You nailed it.
what's okay and what's not okay has improved. It's kind of made it murkier for me. And that's kind of, it's frustrating for everybody. And I totally get, like, and this is not at all like the Warrior Trading had to make a decision on settlement versus trying to litigate. And it's not their job to litigate so that we're all clear on what it is. They've got a business decision to make, and I get that, but it is like, I think this lack of clarity is very frustrating. And I know it isn't just for me, it's for a lot of people we talk to in the industry. A lot of guys are like, well, I see this and now I feel like, what's okay and what's not okay. Because there's things I feel like I see in here that I could probably go back to previous cases that were all over the place in copy that were never used, never listed as, an issue. And some of them are not, like the sign up page stuff seemed like not really earnings claim related. And so that's like, it confuses me. And
I agree.
Do you think like day trading in and of itself is an area that they're just like, you know what, we don't think people should be doing day trading? And
I think that's got a lot to do with this. And if we scroll down the complaint, we then get to a section where they discuss disclaimers are ineffective and fail to prevent earnings claims from being misleading or deceptive. They discuss that Warrior Trading does not have access to the personal trading accounts or broker statements of its customers. For that reason, Warrior Trading claims that substantiating Warrior Trading's customers' trading performance would present a practical impossibility. However, the data procured by defendants suggests that its customers are likely to lose money day trading after they join Warrior Trading. The FTC explains Warrior Trading keeps track of how its customers perform using a simulator, and the simulator data from November 2020 through March 2021 shows that 74% of the accounts lost money and only 10% earned more than $90. So yes, is the answer, John. I think that the FTC doesn't like marketing day trading as a way to be able to make money consistently, easily, in large amounts. And later, the FTC explains that Warrior Trading steered customers to broker dealers, and analysis of the trading records identified by those broker dealers showed that the vast majority of customers made no money or lost money. So maybe the case isn't so much about the claims that were used, kind of in and of themselves, but the fact that there wasn't the foundation, the backup for the claims.
Right. And so these two numbers right here, 84 and 85. So I've seen this many times. This has been around for years, especially with TradeStation, where they'll basically rebate a customer a percentage of their commissions to cover the cost of a trading program. And my understanding from the broker's perspective is, hey, we make more money if the trader doesn't blow up. So we like educators who can help traders be better. And so we can plug them in. But with 85, they're basically saying that you have this relationship and the broker can see whether they're making money or not. And so that typicality of result is available, but like a broker wouldn't share that. Like, what's the purpose of those 2 points there? Like, or what are they saying here?
Well, I think they're just saying up here, the simulator data that Warrior Trading has itself in its own possession
I hate
supports that people aren't making money. And FTC has also subpoenaed the broker dealer
Okay.
that Warrior Trading steered people to, and the records that we got from broker dealer corroborate that people aren't making money.
Right.
So it becomes more and more like me saying I'm going to play an NBA playoff game tomorrow night, or and score 20 points. Or that I'm a coach and I've had lots of successful players make it to the NBA when I've had none.
Right.
And so, it's again the situation where the same exact claim could be fine if made by one company, but be high risk if made by another company. That said, like if tomorrow the market just totally tanked and everyone lost money, it would be wrong for the FTC to be able to come along in December of 2022 and say every single financial publisher that said they were good at picking stocks and could help people make more informed stock picks and thereby make money, all of you were deceptive. All of you engaged in fraud. I think with the stock market and with day trading, right? People are inherently know that things go up, down, and a lot of it's predictable, but a lot of it's not. Day trading is obviously riskier than trading large cap stocks. But I think it's going to be really hard for companies doing day trading to advertise how it can help people if they can't make any of the types of any claims at all, right?
Yeah, and it's interesting to me in the trader education space, in the trading service space, whatever you want to call it. There's different business models, and a lot of these cases seem to be, and I put Warrior Trading in there just from what I've seen of their advertising. I don't know them. Is that they're top of the funnel part of the industry, right? So they're these kind of things when you're a business that is going out and you're trying to recruit new people to trading is kind of what it feels like, or convince people that they should be traders. That's where this that seems to be like a lot of this issue for like you scale up to a certain point, and if you're going out and telling people to become like convincing them to trade, that's a very different business than some of the other actors in the space who are not really doing that. They have very substantial businesses, but what they're doing is they're taking people who are already traders and saying, we'll make you a higher performing trader. We're going to work with somebody. So it's a more sophisticated customer to begin with. And therefore the advertising is fundamentally, I wouldn't say more sophisticated, but it's not on this, hey, you can get rich trading. It's much more on here's a specific strategy, here's a thing. Like it gets into the details of the market versus on just a global like get rich kind of storyline.
Right.
And those people I haven't seen have cases brought against them yet. And I think that's like from a business strategy perspective, I think that's really relevant for people to be aware of.
Yeah, one of the things we focus on when we're going through copy is, and you heard my colleague Ben Kinney say this, focus on the product, not the profit. Mm-hmm. So discuss what is valuable about this product and the research and analysis and experience that's gone into coming up with these strategies. But just don't start sort of reiterating again and again, you're going to make a lot of money, you're going to make a lot of money, you're going to make a lot of money. That's going to be a problem.
Right. It's a difference. I feel like and maybe this is a stage of the market thing because they are bringing people in that like in the investment space, you don't see if you go back far enough, and I'm talking about like the 80s, early 90s, you'll find promotions that say get rich in the stock market. Because it was such a early stage of awareness, they're trying to bring people into the investing idea. That ended decades ago. Most of the stuff that you see related to investing is very much about like looking at a specific investment opportunity in some different way. And so you don't have this like, while there's plenty of risk in a lot, again, sloppiness that can happen, you when you're talking about an investment opportunity or a particular trading environment or dynamic, you're not making these big, broad, like generic get rich quick kind of statements. And so that's again, so like the decisions for the people listening, like these kind of decisions are like these knock-on effects that you have where it's like the market you choose, the products you choose to sell, and then the model of the customer that you get. You kind of get the customer you want, because honestly, like you could tell, everybody who's been in the space long enough knows, like the guy who just came in for the first time as a trader on something like this, where it's like, I'm going to make a bunch of money as a trader for the first time. Like, you know, I have $2,000 to my name, and maybe one day I'm going to be worth $1 billion because I learned this trading strategy. But at the same time, I literally have $2,000 to my name. Like that guy's not just he's a terrible customer.
Right.
And so like there is like these business strategy questions that are relevant. And I know all of us we get frustrated, and some people get very angry at the whole idea of the FTC coming in and talking about these things, but the FTC is going to do what the FTC is going to do. I feel like for our people, it's really relevant to really think about like what these specific claims are, but also like understanding that some areas of the business, or types of businesses, some areas of the industry are fundamentally higher risk because of how you have to talk to somebody. You can't talk to somebody who knows nothing about trading about the mechanics of the market in a way as easily to be interesting as it is to talk to somebody who's already a trader.
Right. Yeah, and I want the FTC to understand where the distinctions are in terms of the type of product, in terms of the consumer and their sophistication. And I think that there's work to do over there with the FTC. I think some people are very open-minded. I shouldn't say very open-minded. Some people are somewhat open-minded, and others not so much. I think they're really struggling because they've gone after multi-level marketing companies. They've gone after business in a box. You're going to make tons of money, just buy our package and work from home. And these are all different verticals where maybe not sophisticated consumer, and the profit sort of issues are really under the control of the business. And investing in the stock market is different. Mm-hmm. Again, there's everybody who does it on a regular basis knows there's unpredictability there. And so I think that they shouldn't necessarily apply this approach to that. It's not one size fits all. Mm-hmm. And I think with warrior trading, the focus maybe they could have flipped it and said in the complaint, no one made any money, or very few people made any money, right? And then because of that, these claims were deceptive. But instead they say, here are the claims. Mm-hmm. We're not going to tell you which ones we had problems with. And by the way, people made no money. Right. I think the story could have been reorganized, but I'm being really critical here. Let's go to the settlement.
Okay.
So this is the order that will be entered by the judge. So it's basically the settlement agreement here. And the claims are primarily under something called the telemarketing sales rule. And that is in large part because the Supreme Court ruled against the FTC last spring and made it very hard for the FTC to get money from just basic deceptive advertising under Section 13B. The FTC is trying to get that changed in Congress. There are lots of other statutes they can use besides the broad Section 13B power. But anyway, in this case, the kind of the hook to get money was the telemarketing sales rule based on communications in telemarketing. Mm-hmm. And I don't get too hung up on that. But in broad strokes, all the same things we talked about in terms of deceptive advertising in online ads or in website landing pages, all that also applies on the calls between a consumer and a telemarketer. And then there are also consent record keeping requirements. Yeah.
Wildly ignorant question. Because I noticed that the telemarketing sales act, or whatever it is, was where a lot of this is focused. What does that change things if you don't even have, for those really small guys who don't even have phone sales? I mean, at a certain point in the business, everybody gets phone sales because as a revenue producer, it's a very stable revenue producing thing. But for people who don't have phone sales,
Yeah,
what does
it
that mean?
would change things. So another way for the FTC to get money or try to argue that they're entitled to money, given the state of the law right now, would be if there's subscription billing.
That's right.
And the FTC could say that the company has violated the Restore Online Shoppers Confidence Act, ROSCA, and not properly disclosing the subscription billing terms, not getting the consumers express consent to the terms, making it hard for people to cancel their subscription. And in the MoviePass case about a year ago, the FTC took a very broad interpretation of ROSCA to say it was basically like an advertising statute, even though it really has to do with the checkout page and what you say on the checkout page. But there are other things the FTC is trying to come up with. And I should also add, I should have talked about this at the beginning, but the FTC sent out in October, maybe it was November 2021, notice of penalty letters to 1,100 companies about earnings claims, saying we are putting you on notice that if you make deceptive earnings claims, we could pursue you for penalties of up to, it was then $43,000 per violation. So that's another way the FTC could find a company that it thinks is doing wrong, maybe think, okay, we don't know if we can bring a claim under the telemarketing sales rule. We're not sure we can bring a claim under ROSCA, but let's go ahead and send them this letter giving them notice that they'll be violating the law if they continue to advertise the way they are. And then a month later say that they hadn't changed, they've still done it, and then pursue them under that notice of penalty authority. And that would be tested in the courts, or at some point it will be, but that's another approach they could take. So turning to the consent order here, let me just point out a couple things here. So we've talked about what are the rules now? Where's the line? It's muddled a little bit by this complaint, but it really shouldn't be that muddled. And I think the FTC gave some clarity here in the actual consent order. So this defines earnings claims: any representation to a consumer, specific or general, about income, financial gains, percentage gains, profit, net profit, gross profit, or return on investment. And they give examples here. Mathematical calculation, statements from which a prospective purchaser can reasonably infer that he or she will earn a minimum level of income, earn enough to buy a Porsche, earn a six-figure income. Any statements, claims, success stories, endorsements, or testimonials about the performance or profitability of representatives, endorsers, instructors, or customers. So these are all examples of earnings claims. But just to be clear, this isn't saying that earnings claims are illegal.
Right.
This is the definition. So then let's get to what the FTC thinks is necessary to make a lawful legal earnings claim. That comes down here. This is enjoining the defendants, in other words, prohibiting the defendants from making any earnings claims expressly or by implication, unless the earnings claim is non-misleading and at the time the claim is made, defendants have a reasonable basis for the claim, along with written materials that substantiate the claim, and that they also make these materials available upon request to the consumer, potential purchaser, or the FTC. But in short, you can make an earnings claim if it's not misleading and you have a reasonable basis for the claim. There's a lot, maybe gray there, but it does give more instruction than the complaint. And so if you're talking about the past, you need to make sure you have backup for that.
Right.
So you have substantiation, and you need to disclose what is typical, so it's not misleading. So you can talk about past success stories, but I think it's important to also say, here's what the average return is, or here's what the average win rate is from this period to that period. It's not unlike the weight loss pill ads that will say, Susie lost 20 pounds in 3 weeks. Mary lost 12 pounds in 3 weeks, 4 weeks. But then say the average weight loss was 1 to 2 pounds per week in a study from this date to that date, where this was taken along with a healthy diet and exercise. That's the typicality. And so I think, yeah.
Well, typicality is the thing that, like, I guess it can be clear cut in some cases, and then it can be wildly, because they're like, so take trading for instance. Like, trading is a skill based thing, right? Like, you can take the same traders, give them the same strategy, and there's still like individual choices you have to make. There's this variability in it. And so a great trader can say, I've done this, I've made these things.
Yep.
And when I've shown it to people, this guy did this, this guy did that. Most people are maybe never going to make money with it, but that's not because of the system. It's because of the fact that, like, it's kind of like there's a certain, there's innate talents, and there's also how hard you work on it. Like, there's all kinds of variabilities or variables just on the skill side. And then you put the market environment in, which changes. And there's sometimes when, frankly, like, if you're trading a system in a very particular market environment, everybody's making money. I mean,
Right.
You have to go out of your way to and then there's other times when, like, man, it's really hard. And so that, like, there's all these different variables that come in. And so, like, talking about typicality, and I totally understand, like, the need to try and convey a typicality or a typical scenario to prospective customers, but how do we fundamentally talk about something that has, like, this wide range of variables that come in, in a way that, like it's the same thing with weight loss or lifting weights. Like, I could have me and another guy could have the same coach, and he loses weight like crazy and I don't. And it's my genetics, but it's also like my behavior and the fact that I love nachos and maybe he doesn't. And the same thing with putting on muscle or all these different things. And so that's something that just when we talking to guys, and you hear the same things. Like, how do we talk about this and still talk about the potential success, or not even the potential success, I guess at this point. It's like the fact that we've had success, that there is this opportunity. And I do see it really hard. Trading in particular is harder to sell right now than say an alternate investment asset like crypto stuff, like because of that skill-based nature. Because once you get into anything that's skill-based, it gets really, really variable.
Yep. Well, I think we are going to need to work with the FTC. When there's not an investigation pending, or if there is, but to have dialogue with the FTC to help them understand these issues, that there is variability and it's also understood by the consumer, and that the First Amendment principles apply, and people should be allowed to say they're good at what they do if they're in fact good at what they do, and they should be able to give examples of that. And that doesn't mean that the net impression to the consumer is that's going to absolutely happen to me. So, if an actor won an Oscar and then decides that he or she wants to teach an acting class, and the actor's bio says he won an Oscar, I don't think everybody in the acting class thinks that means they're going to also win an Oscar.
Right. If he says Oscar-winning acting skills, you're not necessarily going to be like, I'm going to win an Oscar.
Right. And so use some common sense here. People should be able to talk about that they're good at what they do and give examples of that. And I don't think the natural takeaway is, that it means that's going to happen to me. It's that simple. Because we, so often the FTC gets settlements like this. And again, maybe this was a case where it was more about the numbers and people not making money, but because there's so many settlements, some of the FTC's beliefs about net impression haven't really been tested. And they certainly haven't been tested in the financial publishing context. But I think what we can do going forward is when we talk about the past, make sure there's backup and make sure we have information to discuss its typicality. And when you talk about the future, be very careful and don't use numbers, percentages. Don't think that because you use the words could, may, possibly, potential, when you talk about the future, that that's okay, because it's not whether it's literally true, it's an impression. So you need to be very, very careful talking about the future and frankly be vague. But again, I think that it's okay to say you're good at what you do and you think it's going to continue.
Mm-hmm.
I know we've been going for a while, John, but how about if I just turn to the notice of penalty? I'm not notice of penalty, but notice of proposed rulemaking.
Yeah. Well, can I ask one more question before we do that, just real quick?
Yep.
The phrase permanent injunction.
Yeah.
Are they permanently banned from doing anything that they weren't that they weren't supposed to be doing anyway, quote, in terms of in the FTC's eyes, or did it change anything about how they can operate their business other than their copy needs to change?
Yeah, let's go back to the order here. So this is the injunction. So going forward, if they're going to make earnings claims, they've got to do all these things, have written backup, have a reasonable basis, can't be misleading, which is another way of saying you can't deceive by not disclosing typicality. Then they have language about they're enjoined from misrepresenting certain things. Mm-hmm. That somebody can have proficiency regardless of their education, background, skills. That someone can achieve consistent profitability. That someone can, again, achieve consistent profitability without significant amounts of investment capital. That someone could use the strategy to make money without spending significant time trading. And kind of a catch-all about other misrepresentations. So they're enjoined or ordered to not do those things. Then we get to the telemarketing sales rule. They are enjoined from misrepresenting the risk, liquidity, earnings potential, or profitability. The key word is misrepresenting here. Misrepresenting material aspects of an investment opportunity, and so on. And here we get to the judgment amount, $3 million. And there was transfer of certain assets, perhaps in connection with this. One of the more annoying things about FTC orders is that they also have a long life. So for the next 5 years, the company has to give a copy of the order to all employees who have managerial responsibilities for conduct related to the order. Mm-hmm. And they have to do a compliance report a year from now. And for 10 years, they have to give notice within 14 days, anytime there's a change in the business structure, the ownership. They have to keep records for certain records for 10 years, other records for 5 years. There could be a compliance monitor that's going to keep an eye on them to make sure they're complying with this. So there's a lot there.
Okay.
Yeah.
All right. Let's like, that's always sobering. Let's move to the proposed rulemaking and comments for that.
Okay. All right. So
explain what's going on there.
Yeah. So kind of as we've talked about in the past, the FTC lost this case called AMG Capital back in the spring that affected their ability to get money damages. And so in an effort to kind of recover from that and pursue businesses that make money-making claims, the FTC is proposing to issue a rule that would prohibit types of claims, kind of along the lines of what we've talked about, but it probably will be more bright-lined, more specific, more rigid. And so they issued about a month ago a notice of this proposed rulemaking, and they asked the public to submit comments by May 10. And this is what it looks like. So, sorry.
No worries.
Uh, it's basically the FTC criticizing kind of what's going on in industry and why there's a need for a rule and asking for comment about how to craft this rule. But they say the case is established that earnings claims are material. Representations regarding possible earnings are not mere puffery and will usually imply that the earnings are typical. The representation that an amount or degree of earnings is likely can be implied, including through testimonials and examples of hypothetical or past profits, and earnings claims must be substantiated. The FTC says, in their view, the liability turns on the net impression, not merely the express terms. Disclaimers do not bar liability, as they often fail to dispel a misleading impression. A company may be liable for bait and switch advertising or use of misleading door openers. Now the FTC explains AMG Capital. The FTC says we lost, and we now are trying to make sure that we have the ability to stop illegal conduct. So this is in the works, and there are, I think, among people in your community, John, our community, Financial Marketing Summit, and people that are really kind of attuned to these things, there's real concern about a rule that would be a one-size-fits-all rule, because this would be about any companies making money-making opportunity claims. It could be about the business coach, business in a box, the multi-level marketer, the gig economy, make up to $2,000 a week going door to door, doing whatever another thing, as well as financial publishers, but they are different industries. And as we talked about before, the same claim could be fine by one person and problematic for another. And then you have First Amendment issues, the distinction between commercial speech, advertising, and non-commercial speech, which is education or the product that you've actually already sold, now you're delivering. There's a lot of things that could lead to a rule being very problematic, because it would be too much of a bright line and and lead to inappropriate prosecutions.
Yeah, exactly.
Yeah.
And that's where I think that the fact that we're talking about a single, like one rule to rule them all, in terms of industries, it's wildly different just within the industry to talk about like the nuances of things. And so I can't imagine like having a single rule that kind of crosses all those different industries that is relevant to a customer in FinPub as it is to a driver thinking about going to Uber. That's really problematic. And so that, I guess we should bring up then that a group of us have actually been very concerned about this and some other things about this kind of state of the industry, both internal to the industry and then also to the FTC and other kind of external players in both regulatory and big platforms. And we started to put together a group to kind of address these things. And so we have like some of us put some money out we've engaged Damon and his firm to help start to draft some comments on this rulemaking proposal to give our view, because we think that it's really important as an industry that we start to stand up and talk about these things with regulators, and we're really focused on this regulatory aspect. So it's something that, we're just, we see how vague it can be now, and how this case kind of takes some of the clarity away for us. We just think it's really important that as a group, we start to get involved in these conversations, engage with the FTC. Damon, you've been a phenomenal kind of help in this, just because you do know people over there and you do have conversations with them regularly. So I don't know, it's something that we're going to talk about more at the FMS event coming up here in just less than 2 months, I guess, a month and a half. But it's something that I think that obviously is relevant for all of us anymore. You can't sit on the sidelines and just think like, hey, everything will be fine. It's like, everyone has there's different interests. The FTC have different interests. I don't think that the FTC is fundamentally like evil or wrong or doing anything. Like they have a mission and they have a viewpoint and they have their levels of experience. And then, it's up to us to engage with them and kind of share our side of it and discuss things with them. And so that's kind of where this proposed rule is exactly the kind of place that we as an industry should be having a conversation. And so I don't know if there's anything else we should say. You want to say about the rule, but
no, I think, John, I think everything you said was 100% spot on.
thanks.
And yeah, I think there are smaller industries that have active associations. I think it's financial publishing. I guess the association is going to be called the Financial Publishing and Media Alliance.
Yeah, and I do think the reason is that I feel like these industries, media and publishing, are in transformation. As everyone knows, I've been talking about for the last couple of years here that we're an industry in transformation, and what used to be defined as a financial publisher and what will be considered a financial publisher or media business is changing, and there's more variability in that, which then means that there's going to be even more nuance. There's going to be more regulatory issues that go beyond the FTC for some groups. We're already seeing this now, and that's a bigger conversation. But it kind of we need to kind of be looking at the regulatory environment, the compliance environment, the media, like Google and Facebook platform environments from a little bit of a different angle than we would have had to 10 years ago, right? We don't need a model from 20 years ago. We need to kind of think about where the industry is going and what are the issues that are going to be relevant, and I put people at risk if they're unaware of. And so that's very important to us. And I also think that there's just, having seen this, and I've said this a lot of times over the years, there's also internal to the industry, just a lot of entrepreneurs and publishers and media groups who are just unaware of some basic things that they should know, but simple things about, like, well, hey, what's your policy on, like, you have stocks and you're recommending stocks, like, you have staff that are trading, you have all these things, like, are you buttoned up and clean on that? What is the best practices for that? So just stuff like that we think would be really helpful to for folks. And so we'll be talking more about this, the Financial Publishers and Media Alliance, going forward, and kind of a review.
I really don't have anything to add, John. I think you've explained it very, very well. I mean,
well, thanks.
There's there's strength in numbers, and I think a real benefit to having a collective voice when you're talking with large organizations.
Yeah.
And I think, thank you for taking the initiative with this.
Yeah, no, it's we definitely, I said it, I mean, our business is healthier. The healthier our industry is, the healthier we all are. So anyways, like, this is, I want to thank you again for taking the time to go through this in depth with us, because I feel like we've had such great feedback in this last, I'd say, year and a half since you started coming to the summit, and we started doing these calls from so many different people who were like, I've never, like, they haven't had the resource, no one's having the conversation. And so the fact that you've been able to, like, take the time with us and have these conversations, Damon, has, like, had a huge impact on a lot of people's businesses for the positive.
Great.
And so I appreciate it.
Great.
And I guess we'll see you.
And I've got a strong team too. I was going to say, I've got a strong team. Ben Kinney is fantastic, and Ryan Coutlet. So, yep, happy to help.
All right. Well, thanks again. You guys, you have a great week, and I'll talk to you again shortly, I'm sure.
Thanks, John. Take care.
Thanks,
Bye.
David. Take care.